Hey, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and we got a lot to talk about. On the topics for tonight, we're going to be talking about the futures action, obviously. We'll be talking about, let me see if I can move this over here a little bit, swap these two screens. There we go. And it's still not showing the price action for you. Irritating. Very irritating. You can see that the futures are open. We're going to do this side by side for a few minutes, and I'll go full screen. We're going to be talking about the Contrarian Trader Public Forum, economic data coming out this week, our current market sentiment, Federal Reserve rate cuts. What does that mean for the market? Camilla and her platform. Hard to find, but the New York Post got us a couple of bites for us to go over. Government psyops, debt, and why you need to own gold and the gold mining stocks. And lastly, contrarians trade signals are scanned for sector rotation. I have a list of stocks that are setting up, actually ETFs, that are setting up for major bull runs. I'll be sharing that with you free, and we'll be doing stock chart requests. So let's get to it. Let's talk about the pre-market futures action. We expected this. We went over this on the week ahead commentary with members. The 30-minute chart was setting up to be very bullish. And sure enough, we have liftoff here in the pre-market at, it's still rising. This is probably up about 1/3%. Shortly. So right now we're up about a 1/4 percentage point, gaining momentum. Volume, obviously, it's Sunday evening, is going to be fairly light. Let's take a look at the NQ, the NASDAQ 100, the futures equivalent of the NASDAQ 100. And that is up 0.28%, doing a little bit better than the S&P 500. The real sector I'm going to be interested in today is the Russell 2000, the small caps. And they are up consistent with the rest of the market. So my guess here is that as we proceed into the new trading week, that the 10-year yield, is down. And the trend, by and large, sorry about that noise, has been down for the yield, although we did bounce here on Thursday. Could we be setting up for a higher low here? Maybe. Okay. Yields are important. We want to keep track of them. I'm going to go to notes or comments in a moment, so bear with me. We should be on Instagram tonight and LinkedIn. I haven't been on LinkedIn in a long time. Why is this only 720p? My streaming service, they went down. Well, they switched formats. They didn't go down. They switched formats. They gave us no heads up whatsoever. I had to recalibrate everything over the weekend. And it started causing problems last week. And I guess when they were doing their migration. So I'm only showing 720p. We can't have that. You can't give us 1080? Nope. All right. Let me go to notes here and make sure my audio is working good. Franklin, welcome. Larry, the bounce is over. What was the chance to sell? It gets harder from here. I want to be in your camp. I want to be. I can't right now. I can't right now. We're going to go over the reasons why. I'm going to go over the reasons why. So I'm not just going to leave it as a cliffhanger. Danny, welcome. Talon. Grandpa, welcome. Hi, Bob. RB, happy Sunday. SPY short time. Not quite. Not quite. Thank you, sir. Franklin, thank you very much. I was looking for that. Okay, let's continue on here. We have our alert we're working on at or below. Bam. We're good to go. All right, let's take a look at the Dow futures. It looks by and large here a fairly solid open for, where's my Dow futures? I just had them up here. I just had them. I always forget the symbol for the Dow futures. I rarely look at them. Here we go. I want to see how broad-based this is. This is very, very broad-based, this move up higher. And given the 30-minute time frame close on all of these sectors, all of these indexes on Friday, the 30-minute close, you saw a gap up on Friday. Then you saw a drift lower, consolidation, bump, 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 bottom, bottom, bottom. That means they're going to take it up on Monday morning. The question is, do we hold it or do we see selling into that strength? That's the key question. Right now, the path of least resistance is to the upside this evening. Now, we got to take a look at currencies. TZ Burton, welcome, brother. Again, sorry about that noise. Drives me crazy. The dollar is down at current, and it's no great shock. Let's take a look at how it closed out the week last week. Very poorly. No new weekly lower low. It was an inside week. Let's take note of let's do the Japanese yen. The yen was down last week, but it rallied off the lows of the week. So all down weeks. This is this week at current. This was last week. So you can see that this manual line we drew here, probably on a shorter time frame, maybe a 4-hour time frame, acted as support. So we want to know if yen breaks out on a weekly time frame. Actually, this is a daily time frame. Okay. So we have yen down fractionally. I think this gets reversed. We're holding on to the 21 period EMA, the exponential moving average, and that is drifting up, bullish. Euro is trading up, and in fact, you can see how the exponential moving average here in orange acts as support, much like it's doing right now for the yen, and we have broken out. So euro yen, they're looking okay, dollar looking weak, and probably going to get weaker. So where do we want to be? Where do we want to be? We want to be in precious metals. We want to be in gold. We've been in gold for a long time now. We want to be in the gold mining stocks. We've been there for a long time now, and we're only going to be adding more. So here is gold. This is a 4-hour chart. Let's drill down. It's a little bit extended. You know, it's worth doing this. Let's go to a 30-minute view. I got to figure out how to turn off those bells. Yeah, we're already starting to break down here on gold. Short-term time frame. This is your opportunity. Buy this pullback, maybe down to the 21 period EMA. Consult your financial advisor. what I suspect is going to happen here, if in fact we do close down below this lower band of support here, this is a 30-minute bar, so we have some time to go. What they're going to do is what you call a check back. What does that mean? What that means is that you're going to have stubborn bulls who cannot believe there's going to be a pullback on gold. They're going to watch this get rallied back to around 25.50, and it could break out. Maybe they're going to be right. But many times you see a pullback and a break to new lower lows. So gold may be setting up intraday, very, very short-term scalp as a short if you're so inclined. Would I be a buyer here? No, I'd want to get a pullback. But we do plan on adding more to gold and the mining stocks. Let's go here to a 5-minute chart. This will do. And we'll set up an alert letting us know if we do get a check back up here. And then we could open up a short trade, perhaps. I'm not dying to put this trade on. It's a little bit risky. Okay. So that's gold. Let's check in with the silver futures. Silver futures, I'm telling you right now, you look at a monthly chart of AGQ, I'm sure SLV is going to look the same. These charts are looking like monsters. Buckle up, folks. It's going to be an amazing run. So we have silver. This is a 5-minute view. You can see it's pulling back here. It's probably going to consolidate along its 21 period EMA, again in orange. I want to know if we break out. The trend right now is to the downside. Volume, by and large, is sell volume, and it's pretty heavy volume. So I wouldn't go buying here. Volume is dropping off, though. That's a 1-minute chart. Let's go back to the 5-minute. Okay. Gay. If time, please. Of course I have time. You're a member. Always have time for my members. Good evening, all. Mr. Pete, welcome. So, Gay, you love your SoFi. Okay. Let's continue on. Yeah, there it is, resting right along that 21 period EMA. What else do we want to go over here? Let's take a look at volatility. Volatility is down. Yields are creeping up here. And we're seeing a fade. We're seeing a fade on the NQ. Let's see how serious that is. Not horrible. It's what you might expect. I think we're going to break out again. But we do have volatility rising. All right. Let's take a look at copper. Copper is on our monthly watch list, folks. Copper. For whatever reason, Thinkorswim does not save my monthly chart of copper. I shouldn't say of copper, of monthly charts. Won't let me save it. Edit month. The add to favorites button is gone. I don't know. Thinkorswim is going downhill. All right, let's bring up copper on a monthly time frame now. So let's get rid of all these lines. Actually, you know what? Yeah, let's get rid of all these lines. We'll redraw. And I want to show you something here. Let's open up our studies. Okay, on a monthly chart, what you're looking at here is very, very important. You're looking at copper going back a long way, right? So a very, very long-term base has been put in. And what are we doing now? We formed a Bollinger Band squeeze, and that Bollinger Band squeeze has already fired off. What does that mean? It means that you've seen a lot of energy getting built up within this trading range over the course of over a year. And it's beginning to get released and it's firing off to the upside. It's breaking out. Now, it got extended. It's gone now into a downtrend channel on a daily chart, probably even on a weekly chart, but on a macro view, on a monthly view, you're still in a bull market here on copper. Now, I don't have just one ETF of copper on our watch list. I have multiple, and I'll be sharing that list out with you shortly. But clearly, this is an orderly pullback, and we are getting ready to fire off here. And I want to know when we do begin to break out to new monthly higher highs. And it's fine to anticipate what a stock or a commodity or a bond is going to do. The question is, when do you pull the trigger, right? And ideally, we take out the month's high this month. That's a buy signal for me. That's time to say, okay, look at all the damage they did to copper. They whacked it all the way down to the lower band of the declining downtrend channel. All of a sudden, they're closing it up positive. Good stuff. We like that. Trisha, long time. Trish, how you been? Same to you. Same to you. Hope you're enjoying your summer. Sam S. Massive downward revision to GDP from 2.9 to 1.7. Yeah, the Atlanta Fed's been putting out data like that for literally years now. They come out with high expectations. They ratchet it down. Massive downward revision of non-farm payrolls. I have that chart. Yes, that's out there. I'm going to be going over that in a minute. Don't steal my thunder, Sam. How dare you? How dare you? Fed has been lying about the employment numbers all the time. They've been negative. True. We have gold, which just broke below 30-minute support. Let's check that out. Let's see what the volume is there, /GC. Let's bring it to a 5-minute view. I would not short this, folks. I would not short it. If they gave us a check back, if they retested this support level, I would take the chance because I have a stop loss that's set immediately above. Small loss, lots of gain. This is just chasing a rabbit down the hole. I would not short this. Fed has been lying about. Yes, we did that one. So the question is, if these downward revisions are going to move the market lower, they can. Yes, they have moved the market lower until you got the jobless claims for the past 2 weeks that have come out. They've been less worse than expected. And the markets took that and said, okay, the problem's resolved here. It's not resolved. It's not resolved. Regarding November 5th, lots of 20, 40-year-old voters at this time. Scares the heck out of me. The numbers are big. They probably won't vote for the guy who's 78. They tend to be, can't argue with that. Your chart is set up wrong. You have the time frame for 3 years with monthly charts. Candles too fat. Need to get more action. I set it up for 10 years. It only went to 3? Hold on. Let's get this right now. Damn it. Damn it. All right. Edit. 10 years. But I think you're right. It's only set to 3. All right, I'll live with it. I don't spend that much time on monthly charts in Thinkorswim. So thank you, Paul. If you have a suggestion on how to fix this, because I'm not seeing it, and I'm under pressure right now to get this right now with a lot of people, 32 people watching, let me know, please. Thank you, Paul. All right. Whoo! Let's get to let's talk about live cattle, agriculture. The prices are beginning to come in here. And my guess is that they're going to go a lot lower. As a matter of fact, you have a double top. This is live cattle. And I'll tell you right now, this looks as though we have a double top. And if we break below support here, this will be a confirmation breakdown on cattle. That means my New York strip gets cheaper. Jonathan's Restaurant, if you're watching it out there, my favorite place to eat, my New York strip. Don't chip me, man. Lower that price. Live cattle. Weekly chart. Okay. So we technically broke support last week. This is last week's chart or last week's candlestick, and we are down below the lower band. Let's turn this to yellow. We closed down below support. Expect a retest. And dare I say we might be shorting live cattle this week? Ooh, just a thought. All right, let's check in with energy prices. /CL. That's light sweet crude. Now, light sweet crude was looking good on Thursday night. And as I said on Thursday night, one trading day left to go during our live stream. And man, Friday, oil got annihilated. And as a matter of fact, oil at current is down nearly another 0.5 percentage point. So the question I'll riddle everybody with is this. If the economy, according to CNBC, the powers that be, the oligarchs of the world, if the economy is doing so well, why are oil prices going down again? Didn't Biden shut down leases to drill for more oil? Gasoline prices dropped last week. Home heating oil dropped last week. So if the economy is booming, shouldn't fuel prices be moving up higher? Riddle me that. And you could bet your bottom dollar. It's one of the reasons why the Federal Reserve feels confident in being able to cut rates in September. They are going to go. Let's bring up nat gas. Natural gas had a bad week last week. Started off good. Ended off not so good. We're down over 0.75% at the open here. The trend is clear. It's defined. It is to the downside. The bear market on natural gas has resumed, and it looks as though we're going lower. What else do we need to go over here? We need to go over agriculture prices. Let's start off with corn. Let's go to the weekly chart. Before we do so, corn opening down. Weekly chart. Bearish key reversal last week. They rallied it up. There's going to be a squeeze here at some point in time on corn. So we want to set our alarm. I don't want anything to do with it right now. I don't want to short it because I'm worried about a short squeeze, but I will buy it on a weekly reversal bar, a new weekly high or high. Go. Checking in with soybeans. Soybeans are in like a nasty bear market. Look at the price action last week. Absolutely annihilated. Look at the red on the screen here. But with all this red, all this doom and gloom comes opportunity. I don't see it yet, but there's going to be opportunity soon here to put on longs. We need to go to the seasonality charts. Agriculture names in particular, they're very seasonal in nature. So it's very important to watch the seasonality charts. We'll go over to Trend Spider. We could check that out later on if we have time. Volatility. Vol at the open is still down. Taking a look at it on the week last week. This is this week. This is last week. Look at the bearish reversal bar. Nasty. What else do we need to go over? Bitcoin. Bitcoin is very, very sloppy. Not much happening here. You would figure with all the risk on that's going on in the equity markets, Bitcoin would rally. It's not. It's treading water. That's about the most you could say for Bitcoin. We own Palladium. It's been doing well for us. How is it doing now? Not so good. Down about a 0.5 percentage point. Okay, I think we covered the futures. Let's get to it. Let's talk about the week ahead. All right. Oh, before we do that, folks, launching August the 30th, the year of our Lord 2024, we're going to have our Contrarian Trader Public Forum, free, no credit card required. Enter your email address, link below. In fact, I love this. If you watch this on any platform, I can also give you a QR code. Cool stuff. So scan that QR code. And if you watch this on Twitter, link above, and it'll take you over to this page. Probably after the first few hundred members are joined and we have an established community, I'm probably going to charge a few dollars for new members. Those who sign up now, no charge, never going to be a charge unless you cancel and you come back. So what we're going to be doing, stock chart request reviews for live streams. So we're going to be posting them. We're going to be organized now because I miss them sometimes. And I'm going to be able to get through them a lot quicker. So you'll be going into the members area and you'll be replying to my notice. In fact, you can see here, I've already added for this week our Google Doc for my top picks for monthly breakouts. So go check it out. I'm going to share this link with you actually, but this is going to be posted moving forward in the free forum. So enter your email address. We hate spam too, blah, 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 blah. So let's get to it. All right. Coming up this week, it's going to be all about the Federal Reserve. When is it not? But this week more so than often. Monday, we're going to get Fed head out. 10 a.m. tomorrow. Remember, 10 a.m. report. And this is an important report. Leading economic indicators, very, very important number. Tuesday, more Fed heads. You have Jackson Hole happening this week. They all got to get in front of the camera. Wednesday, the minutes from the July FOMC meeting. That'll be interesting. Initial jobless claims. They've been goosing the market on positive numbers. So 2 weeks in a row, they've taken 3 months, 4 months of non-farm payroll data and said, nah, I'm not worried about it anymore because we had 2 weeks of jobless claims that came in less worse. I don't make the rules. That's just the way it is. Is it logical? No. But we're having rate cuts coming soon. S&P 500 services PMI coming out. Manufacturing PMI. That's Purchasing Managers Index Friday. Everybody's going to be watching this. Fed Chair Powell, his yearly speech over at Jackson Hole. So you're going to have everybody there with their polo shirts and sport jackets. It's usually the attire that they wear. It's kind of really boring, drab. But who am I? Also coming out this week, we have earnings being reported, and it begins after the close in earnest with Palo Alto Networks. That's on our watch list. Tuesday, before the bell, Lowe's. A lot of Chinese stocks. Home builder toll after hours on Tuesday. Target, Macy's, TJ Maxx before the open on Wednesday. That's going to be interesting. After the close on Wednesday, Snowflake, Zoom, Baidu, Chinese stock, before the market opens on Thursday. Not much else for the rest of the week, really. Not much whatsoever. So a relatively quiet week, I would say, with the exception of Palo Alto Networks and a mixture of Lowe's and Wednesday's retail numbers. Those are the most important ones to me. Multiples. We are sporting a multiple at current of 35.82. Buffett indicator has it strongly overvalued. So we're going into a new trading week. Very expensive, but who cares, right? Nobody seems to care about valuations anymore until they care. We don't know what's going to be that pin in the bubble or on the balloon that's going to cause it to go boom. So right now, nobody cares until it becomes a headline. Forward-looking earnings. So this kicks off the story of where I think that we're going. So this is from Ryan Detrick, CMT, certified market technician. How can stocks be doing so well when the SAM rule triggered? SAM rule is when you have, roughly, fact check me on this, but I'm in the ballpark, 3 consecutive months of rising unemployment. I'm in the ballpark, trust me, or else do a Google search. Or the yield curve inverted or uninverted. We've been talking about this for a while now, the uninversion of the yield curve. We're going to go to a chart in a moment. Or a small sample size of Purchasing Managers Index that weren't hiring last month, LEIs or PMIs. So what he's pointing out to here is that the economic data, except for some last week, has been by and large poor. It's been poor. Yes, the yield curve has been inverted, but what he's not getting here is something that I do get, and that is that this market can move up higher if the yield curve does not uninvert. If it uninverts, then I think that the bias will be to the short side. We're not there yet, and I'm going to bring up a chart in a moment that's going to say exactly what I'm saying to you right now, that we're seeing an inversion of the yield curve. We're off the highs of the month. And while we're still up on the month, even if we close where we're at or at current or slightly higher or lower, it's a bearish setup. It's a topping tail. So we'll go to that chart in a moment. We'll talk about it a little bit more. A 62% drop in the VIX over the last 9 trading days is the biggest volatility crash in history. Following big VIX declines in the past, the S&P 500 has been higher 1 year later, 100% of the time, with an average total of 14.3%. So this is fact. We're not dealing with speculation. We're not dealing with anecdotes. We're dealing with fact. That's how we trade here. We know that the yield curve uninverts. It means bad things for the equity markets. We don't have that. It's pulling back now. We have a crash in the VIX that can't go unaddressed. So the statistics show that 1 year from now, we will probably be higher. Does that mean we're not going to see volatility between now and a year from now? No, of course not. Higher could mean 1% higher. It could be relatively unchanged with a bias of 1%. So it doesn't mean that we can't move up higher. Do they give us an average here? I think they do. Average of about 14.3% higher for a 1 year total return. Now, 1 month to 3 months later, you're still up, but you can tell you're floundering back and forth between positives and negatives. But by and large, the trend is up. So you can't argue with the stats. CME Fed Watch tool. This is the only problem I see for equity markets at current. And that is, it's not this. They're going in September, absent an event, a huge spike in inflation, which we're not seeing. But the difference from this week to last is that last week, after that sell-off, there was an expectation for a 50 basis point rate cut. Now it's pretty much in the books now, only 27.5%. So it's probably just going to be a quarter basis point cut. By and large, doesn't mean much. But they're going to do consecutive rate cuts going out to January is 100%, March 100%. I mean, they're doing rate cuts as far as the eye could see. So Bidenomics is working, clearly. What are they worried about that they need to cut rates? What are they worried about? They should continue rolling off debt off their balance sheet and do the right thing, but they're not doing that. They're worried about something. And I think it goes back to what was mentioned earlier from Sam, and that is the jobless claims. Forget about the weekly jobless numbers. Watch non-farm payrolls. Don't watch the U3 report. That's the headline report. That's the one they want you to look at. Look at the U6. U3 does not include those that are marginally attached to the workforce. You want the U6. That gives you the all-in view of, wow, there are a lot more people unemployed than I thought. All right, can this market continue up higher? Yeah. This is a weekly chart of the bulls versus bears. You get up around high 20s, low 30s. There's too much bullishness, right? Right now, we're in the teens. They can go higher. So the primary reason as to why this market is going to go higher, and I'm hoping for a pullback because I have shorts out there, and I'll be honest with you, I expected a pullback and a higher low. It didn't happen. So I want to clear off my shorts, and I want to add to longs. So this is the reason why. One of the primary reasons why. Besides the yield curve pulling back, we're going to go to that chart next. Take a look at the liquidity index. So here's the long-term cycle. We are here. Global liquidity. Liquidity is being pumped back into the marketplace. Why have we had a rally off the lows since 2022? Look no further than the little old lady over at the Treasury, that sneaky little Dickens over there. She's been pumping liquidity into the market, even though the Federal Reserve has been dropping Treasury notes off of their balance sheet. So now she's going to stop, maybe, and he's going to start bumping up his balance sheet again. So they're going to be cutting overnight interest rates, and that's going to pump more money into the marketplace, probably through to 2025. This could be a long-term rally here in the markets, absent a geopolitical black swan event. Yield curve. So we're still up on the month, 24.24%, but you're dealing with very, very small numbers here. So at current, at one point this month, we were 1 basis point away from uninverting. Guess when that was? Right before the sell-off 2 weeks ago. Now, all of a sudden, to me, it looks like yield curve control out of the Federal Reserve. But be that as it may, the yield curve is now inverting. It is telling us the economy is in trouble, but the Federal Reserve is coming to the rescue. Have no worries. Have no worries. All right, so let's talk about politics here a little bit. And this is not going to be about anything other than what impacts the market, what impacts the economy, nothing else. So this is fairly accurate. I don't know this gentleman, but Jaron Blokand, Harris wins presidential election, the U.S. budget deficit will explode. True. President Trump wins election, the U.S. budget deficit will explode. True. It's a fact. So why is that? What's the difference between the two? Well, anybody that reduces the deficit without cutting spending or without, I shouldn't say that, without cutting the size of government or cutting the money that's being sent overseas, you're going to see the economy implode. You're going to see the economy implode. We are a debt-driven economy. Why is it that we're always talking about what the Federal Reserve is going to do to identify which way the stock market's going to go? Why isn't it about earnings? Why isn't it about the growth of the U.S. economy? Why is it about a group of 10 people over in the Federal Reserve acting as the Wizard of Oz, manipulating the economy? And they usually get it wrong. Since 1913, they rarely get it right. But this time it's different. So either one of these two candidates is going to increase spending, no doubt about it. The difference is maybe, and you got to hope, is that Trump is going to be the one that comes in and reduces the size of government. If we don't do that, then it doesn't matter who you elect. Really, does it really matter? The thugs that tried to take him out from the inside, they'll have jobs still, and they'll still try to take him out from the inside. So will it really matter? So if he doesn't come in and clean house very, very quickly, then it's just, you might as, either one of them will do. I want to play this for you.
Worrying about the debt. As I said before, keep your eye on one thing and one thing only, how much government is spending, because that's the true tax. Every budget is balanced. There is no such thing as an unbalanced federal budget. You're paying for it. If you're not paying for it through it in the form of explicit taxes, you're paying for it indirectly in the form of inflation or in the form of borrowing. The thing you should keep your eye on is what government spends. And the real problem is to hold down government spending as a fraction of our income. And if you do that, you can stop worrying about the debt.
The great Milton Friedman. So what we have here is a salvageable economy. A lot of people want to give you doom and gloom, 35 trillion in debt. Yeah, it's out there. But if you cut back the government spending and you know, I got to retrace something for a moment. This person here, there is a difference. Harris wants a homogenous society. They don't want free speech. They don't want free thought. They want everyone thinking the way they do. The problem is that, I'm sorry, I'm going to use this is YouTube here, so they do censor. They are mentally challenged people. All right. Just think about the things they talk about. They're mentally challenged. They're debilitated. Whereas when you have free speech, free thought, you have innovation. And the United States has grown to be the world leader due to free thought, free speech, and innovation. So as long as we have innovation, what does that lead to? It means to an expansion of GDP, gross domestic product. And if the GDP grows and they reduce the level of spending by reducing the size of government, guess what? all of a sudden, things get better a lot quicker. But you do need to increase the size of the GDP pie. And unless they do that, then we're in a lot of trouble here. If these communists get in, these Marxists get in, I think we're all doomed. I think we're all doomed. Forget it. Write us off. Write us off. Another 4 years of this is madness. So they're calling it now. If you go to her website, she does not have a policy platform. I was there earlier. I should have brought it up here. All it is a donation page, and the donation page is the same exact donation page put out by Act Blue. Who's Act Blue? That's the political action committee for George Soros. So, communism. Harris unveils budget-breaking $1.7 trillion economic plan that includes government price controls. Did I have it up here? Hey, look who's on. I love that guy. I know I reposted it. Nah, I reposted two of these. It was Milton Friedman on price controls. So what she's talking about here is there's only one guarantee of government price controls. It's that it results in shortages. If you look at any communist country out there, any socialist country out there, the first thing they do is they say, oh, we want to fight the big businesses because they're gouging the consumer. So what are we going to do? We're going to put on price controls. All of a sudden, you see starving people in the street. That's not by accident. That's an outcome. Cause and effect. Price controls, because it sounds good, equals shortages. And this is a post that's put out by Kyle Bass. Kyle Bass is a fund manager. I happen to like him. He's anti-China like me. Let me get this straight. Kamala hasn't held a single press conference since she's become Democratic nominee. Her first policy ideas are to install price controls on groceries and food. How has that worked for other despotic economies? Venezuela, the Soviet Union, Argentina, for starters. Harris's next move is to give prospective home buyers $25,000 to help with home purchases. With Kamala's endless source of dollars, her plans for her crazy plan, I'm left wondering why she's stopping at $25,000. So, what happens if she does this? What if she gets this through Congress? She gets $25,000 through Congress for all new home buyers out there, unless they're going to do DEI or some of that nonsense. God forbid you treat fairness, equality. They want equity. It's not the same thing as equality. So what happens to the price of homes? Well, home prices go through the roof. Everybody's going to want to buy a home. So what happens? Home prices go up. So she drives up inflation. Every time they manipulate with the free market, they get the opposite result of what is intended. They are incompetent. That's why they are in government. Those who cannot, I'm not even going to get into that because I'm going to insult some people. I'm not going to do that. I'm going to refrain on my comment. The funny thing is that it's the same political party that's left the border open. It's created a runaway inflation that's drumming up these populist ideas to create a price gouging boogeyman out there, when a boogeyman she's faux angry at is herself. Bravo, Kyle Bass. Now, here's where I disagree with Kyle on. The American public won't fall for Kamala filming a kabuki film for her campaign. I'm sorry, folks. He's got more faith in a good portion of the American electorate than I do. We've seen too much crazy here over the past few years, and way too many participants in that crazy. I hope he's right. I want to be wrong. I want to be so wrong. So this is posted by the Salty Cracker. CIA is operating domestically. We see this all the time. There are definitely talking points that are being floated around to the different news media, and they play the videos side by side of them saying the same exact, not exact sentences, but they hit on the same words like this. The headlines, every headline, probably within a 24-hour period regarding the Camilla Waltz campaign had to have the word joy in it. It's insanity. It's a psyops. So U.S. government spending, and this is really to bring us back to the economic portion of this. I don't want to get into social policy. We want to stay on fiscal policy. And to be fair, this spending as a percentage of our GDP, deficit spending, has been out of control for quite a while, well before Biden. You can't blame Biden. Did he make it worse? Sure he did. Did Trump make it worse? Sure he did. Did Obama make it worse? He was the pimp Mac daddy of them all, along with Bush. So this has been going on a long time. We need to get this trend moving lower. Now, this is what Sam was mentioning earlier. Goldman, we believe, the preliminary estimate for benchmark revisions to non-farm payrolls will show a downgrade revision as large as 600,000 to 1 million jobs for last month. Or is this annual? Make sure I get. No, I'm sorry. Annual. I apologize. Annually. So think about that. They got it wrong, potentially between 600,000 and 1 million jobs. Our latest analysis suggests the benchmarking to the QCEW could erroneously revise 300 to 500,000 working unauthorized immigrants out of payrolls. So bad. If this is from Javier Milei, the new president of Argentina. If printing money would end poverty, printing diplomas would end stupidity. Perfect. I love this guy. Perfect. And what did he do as soon as he came into office? He cut out half the government agencies. Just went in, abolished them. That is the Pimp Mac Daddy energy we need coming into office in January, I should say. All right, so all of this, either way, folks, gold is going up higher. The confidence in the U.S. dollar is eroding and eroding fast now. Nobody wants the Chinese currency, the renminbi. So I'm not going to go through this article, but it's clear. Gold is going up a lot higher. This is just a weekly chart. And I'm expecting a pullback here. At some point in time, we tapped the third standard deviation Bollinger Band. We did that back here, and we pulled back. So would I go chasing gold right here, right now? No, but I would use pullbacks as an opportunity to begin buying more. Because unless my pie in the sky hope is that we get a Trump presidency and that he comes in and he cuts government, I mean with an axe. He cuts government and we grow the GDP pie by unleashing innovation. I mean loans to small businesses, et cetera, to come in here and build new businesses and grow GDP. That reduces the size of the debt relative to the GDP. That's the goal. We're not going to pay down the debt with the current GDP. So what's the way out? It's the same way out as what we did back after World War II. We grew the GDP because our debt back then was not much different as it was as a measure of GDP as it is right now. You had a lot less in terms of entitlements, but if you grow the GDP, then you could pay down the debt. So right now, no matter who comes into office, we only have one guarantee. The guarantee is debt is going up higher. The question is, will any of them do anything about it? Will any of them seek to drive a growth of GDP and drive down the size of government? There's only one candidate going to do that. Here's a monthly chart. Beautiful. All this wants to do is go up higher. If the economy is doing so great, why are central banks around the globe buying up gold? Why is gold smacking the Federal Reserve in the face right now? They hate when gold goes up and the dollar goes down. It means that there's confidence in gold, but no confidence in the US dollar. They hate that. It means that they're failing. This is the measure of net interest outlays. I've talked about this before. Net interest outlays, basically just the payment of interest on our debt, not paying the principal, but just the interest, has now, or this is a projection actually, at current, we have now surpassed the defense spending in black, and it's going to dwarf the defense spending in the future. What's the salvation here? Cut spending, cut the size of government, unleash innovation, grow the GDP. Are we over? I got a couple minutes. All right. So I ran a scan. I did a contrarian squeeze weekly, basically in black. Actually, no, sorry, this is a monthly setup. In black, you have your Bollinger Bands. In green, you have your Keltner channels. And in this case here, we own this. The silver miners. Silver miners are getting ready for a major, major breakout on a monthly time frame. That means that this rally is going to last a couple of years. And I have a whole slew of ETFs out there, and they're dominated by small caps, dominated by healthcare, dominated by materials. Particular silver, AGQ. This is a leveraged product. We own this. This is getting ready for a major breakout. A beautiful descending wedge formation. You want to own this. What else do we have up here? I believe the gold mining stocks. Yeah, they've already begun to break out here. This is the junior miners. What else do we have? NUGT. This is a leveraged product. Look at this sucker. Let's recenter this. Beautiful, beautiful setup happening here on a monthly chart. Look at the widening out of these Bollinger Bands. There is so much energy built up here. I think we're ripping up to 70 by the year end. I think we're probably going up to about $65 to $70 per share by the end of the year on NUGT. So what I did is I exported this, and moving forward, I'll put this list in the forum for those that are members, and it's going to be the free community. To run this, though, you're going to need to have TrendSpider, 35% discount code below. And then we're going to do some chart requests. Where's the chat? I'll share this out for you. Bam. Jesus Christ. There we go. I just shared that doc out. What else do we have? Hey, Bob, your thoughts on Tesla? If you get a chance, yeah. We'll spend a couple of minutes. Tesla. Michael, hello. I think Biden been the worst president of all time. I don't think so. I don't think he's been president. Not to get cute with you, I think that the worst president of all time, Lyndon Baines Johnson. He wanted guns and butter. This is what the cause. This is what the outcome was. Everything that's happened to this country goes back to Lyndon Baines Johnson, who became president after the assassination of JFK. Lyndon Baines Johnson. Okay, first up, SoFi. I've been ticked off with SoFi since they stopped trading crypto. I had to sell my crypto, or they were going to force sell it. I missed out on a big run up on Bitcoin, but it paid for my new driveway and patio. I mean, we're consolidating here. We've stopped going down. That's the first line of defense for wanting to get long. And we've broken out. I drew these lines a couple of months ago now. I think it's firming up here. We did a retest. We did another retest. I think that if you're dying to put on a position here, fine. You have some overhead supply above. I would add more on a breakout and a close above this resistance level at around $8.06 per share. And we'll keep this active for, if you're using a monthly chart, you got to keep it active for a while. Let's go to a weekly view, see if there's anything happening there. It ran consistent with the market for the past couple of weeks. I wouldn't put too much on these candlesticks. You have a lot of overhead supply here as measured by this volume shelf. I'm not loving the weekly chart. I would not buy into this overhead supply. Daily view. Again, you need a higher low. I've been a broken record on this for the past week. You need a higher low. Right now, you're in an ascending wedge formation. You want to see a pullback, a real serious pullback, not just a drift lower, and then in a running start at this overhead supply. If we break through $6.03 and then we close above $7.25, I would add more to the position. But right now, I would stay very, very small, very, very conservative. It's not a screaming buy. I like the monthly chart because what it's telling you, right? When you go to the monthly chart, I always preach this, is that if you're looking at a stock that's been in the bear market, clearly this has been in the bear market, rule number one, it must stop going down. Has it passed that rule number one? No doubt about it. No doubt about it. It's bouncing around. You could nibble here. Now it's got to prove itself worthy of your investment dollar. Can it close above key resistance levels? It has not done that yet. Therefore, you wait. Tesla. So I just put the automated trend lines on. We closed last week above a resistance level and a volume shelf here at 213.38. I would look for a retest back down to this level. If it holds it, I'd be a buyer or sell puts. And that price level's at or around $212 per share. Let's go to a daily view. We have daily resistance immediately above here. I would not be a buyer yet. I would wait for that pullback to 212, right down here, maybe 211, and or wait for a breakout and a retest of what do we close? We close at 216.32. Show me a 215 handle on a retest, I'd be a buyer. Let me check the members area, make sure I didn't forget anybody. Nope. Okay. All right. So we have CLW. We offer a complete. Are you kidding me? All right. I'm looking at CLW. What are you doing? An advertisement for them? Okay. CLW. No, this is junk. Avoid. This is it's a daily chart. Hold on. Let me not say that. It's just a daily chart. This is junk. Avoid it. Avoid. I wouldn't short it. I wouldn't buy it. Avoid. Folks, thank you for being here. Don't forget about the launch of our free public network, a free forum. That's launching on August the 30th. No credit card required. Link above on Twitter, link below on YouTube. Use the QR scan code on the screen in front of you if you'd like to use that as well. And the first, it's going to be Monday Night Futures Live. We're going to be going live Labor Day weekend, but we're going to be doing the show inside of the forum. So if you want to join in the Labor Day session, the futures action as we did tonight, head on over. You're not going to get prompted for a credit card. Enter your email address and your first name, and you're on the watch list, the wait list, and then I'll send you out the link to join in on the 30th, and I'll see you on the other side. Have a profitable trading week, and I will talk to you soon. Be well.